This Wednesday, all eyes turn to the United States Supreme Court, a decision years in the making, one that could reshape the U.S. economy, global trade, and even the value of gold and silver. Will America's highest court uphold the presidential power to impose tariffs, or strike it down? Let's break down what's at stake, what's likely to happen, and how it could ripple across markets. The court is set to decide whether tariffs introduced by President Donald Trump using the International Emergency Economic Powers Act, or IEEPA, were constitutional. The key question: did the president have the authority to impose broad tariffs under emergency powers without Congress? Lower courts have said no, ruling that tariff power lies squarely with Congress. Now, the Supreme Court must settle it once and for all. The stakes? If tariffs are ruled invalid, the U.S. government could face refund obligations exceeding $750 billion, a shock that could hit federal finances hard. Legal analysts estimate a 60% probability that the court will limit or strike down the tariff powers, and a 40% chance it upholds them. Here's why. The law, IEEPA, was designed for national emergencies, not sweeping tariff policy. Past rulings have been clear: only Congress can set tariffs. So while the court might preserve some presidential flexibility, it's likely to rein in these powers. If tariffs fall, the Treasury may have to refund billions, even up to $1 trillion to importers and companies. This could jolt financial markets and confidence in U.S. fiscal stability. Businesses could delay investment, unsure of trade rules. And as uncertainty rises, growth slows. Treasury Secretary Scott Bessent warns the U.S. may already be in a recession, especially in housing and manufacturing. This ruling could deepen that downturn. The Federal Reserve would then face a dilemma: cut rates to support growth, or hold them steady if inflation spikes from supply disruptions. A dangerous dance between recession and inflation, a recipe for stagflation. If the court upholds the tariffs, the administration could double down, expanding trade restrictions, raising costs for imports, and risking retaliation from global partners. Inflation would rise as imported goods get pricier. Businesses would see higher costs, squeezing profits and real household incomes. The result? Growth slows again, not from refunds this time, but from inflationary drag and weakened trade. A different path, same risk: stagflation. Combine high rates, tariff uncertainty, and fiscal stress, and you get a fragile economic landscape. Models now suggest a 58 to 70% probability the U.S. economy is already in recession. This ruling, whichever way it goes, could be the inflection point, pushing the economy deeper into slowdown or sparking new inflationary waves. In turbulent times, investors turn to the oldest safe haven: precious metals. Gold and silver react differently to the tariff decision. If the court strikes down tariffs, uncertainty surges, confidence in fiscal stability shakes. Gold likely rallies sharply as investors seek safety. Silver may see mixed moves. Safe haven demand helps, but weaker industrial activity hurts. If the court upholds tariffs, inflation pressures rise. Gold remains bullish. Inflation and lower real yields push it higher. But silver, with its industrial tie, could lag if growth slows. With gold already above $4,000 per ounce, analysts see further upside. Silver remains volatile.
Magi Metals.